What is up, YouTube? Welcome back to another video here, and the premise of this video is to show you guys exactly how we can trade the Asian session liquidity sweep. Okay, so this is on Euro USD, one of the major foreign exchange pairs on the 15-minute time frame. Okay, for anybody that is new here, I just want to break down exactly what a liquidity sweep is. Okay, so for example, we have some sort of ranging market. Okay, for example, something like this. We then see a violation outside of the norm, i.e., we are breaking above these fractal highs here. Okay, so we're sweeping above these highs. Okay, and then after we see the sweep of liquidity, we're then looking to catch this impulsive move, which is this green arrow here. We're looking to catch this move to the downside in as a trend continuation play. Okay, so essentially a sweep of liquidity is where you've got a build-up of highs. So for example, this is the most recent high here. We've swept that liquidity, we've broke above that most recent high here. We're then using this as fuel in order to push price to the downside, okay, and vice versa for the upside, okay. But in this example, it's a sell example, so this is what we're going to run with. This is the entry model that we're going to be using within this video, okay. So let's just jump straight in here, guys. Okay, and okay, so current time of this trade at the moment is 07:15 a.m. GMT. So that's UK time, Greenwich Mean Time. Okay. What you can see here is we have a Asian high here. Okay, let's just extend that across and make this very, very simple. So you can see this is the Asian session, and the Asian session has traded overnight. We've woke up 7 a.m. Okay, and we're looking to enter the London session. All right, so overnight we've had this range which is built up during the Asian session here. Therefore, what we understand is there is a lot of liquidity resting above the Asian high. Okay, so a lot of retail traders, I understand we are retail, okay, but what I mean is people that trade very retail concepts, okay, they may understand market direction. So for example, you guys might understand that, okay, this market's more likely to go to the downside, okay, which is a very, very, it's a statement that most people probably know, okay, when you zoom out here, more likely to go to the downside. However, when you think about where the retail stop losses are going to be, they're going to be resting above these Asian highs, right? They're going to be resting above here. So when if price does push up and manipulates the Asian high, then we can look to, look to get short on this market if our entry requirements do set up. Okay. One very, very important thing I think with a lot of new traders is, you're not willing and you're not patient enough to sit on your hands and wait for these sort of setups to occur. Okay, you always want to be in a trade, or you need something on. You're sort of too eager, right? You need to be very, very patient, understand exactly what you're looking for in the markets, and then that's all that you trade. Okay, you're not flipping biases and going, one day you're looking for longs, one day you're looking for sells, shorts. You have your strategy, you stick to it, and you only execute in the market when that strategy aligns. Okay, if it doesn't align, then there's no trades being taken. Okay, so let's just fast forward this on, and you can see this blue shaded area here, if we zoom out a little bit, is the London session. Okay, so between 07:30 a.m. GMT up until 10 a.m. This is the volatile session that I'm looking at trading. Okay, the reason why is because that's when we expect the most amount of volume to come into the markets. Okay, you may ask, well, why are we looking for shorts? Okay, it's very, very simple. So if you go over to your indicators tab here, whether you use EMAs or moving averages, they're very, very similar, okay? But if you go up to indicators and type in, so it's 20, 100, sorry, 20, 50, 100 EMA, it's this one here. Apply that to your charts, and we only need the 100 and 200 moving averages on your chart because we don't want to have too much noise and we want to keep it very, very simple. Okay, so the red one here is the 200 moving average. The blue one here, sorry, 200 exponential moving average. The 100 is, sorry, the blue line here is the 100 exponential moving average. Okay, when the red one is on top of the blue one, so the red one is above the blue one, therefore we are sell bias on the market. Also, you can see there's a large distance between these exponential moving averages, which is also an indication that, okay, we do have very, very strong recent momentum to the downside. Okay, and if you zoom out, this will also be, sort of solidified by the bigger picture. You can clearly see when you zoom out here, price is moving from top left to bottom right. Okay, clearly, the momentum is shifting to the downside. Okay, so we can see that from naked price action, but it's also confirmed by the moving averages, and you can also see these moves here to the downside are very, very impulsive. Okay, so we're essentially looking to catch something like this, an impulsive move to the downside, which has been happening in recent times. Okay, so that's why we have this is why how we have that directional bias. So we're looking for shorts only on this market. And now let's jump into the actual entry schematic. Okay, so you can see here what we talked about at the start, which was a liquidity sweep of our range here. This is our Asian high. You can see we've purged that liquidity. So if you zoom in here, clearly price is purged and came above this liquidity here. Okay, we broke above. Therefore, we are manipulating traders out of the market, whether they're retail, institutional, it doesn't matter. The point is, traders are being manipulated out of the market. They're being stopped out. Anyone that's looking to go short, their stop losses are above these fractals here. They're sat above these areas. Okay, so we've seen a run on liquidity. Therefore, we can enter if price breaks below the low of the candle that has swept liquidity. Okay, I'm going to repeat this because it's very, very important, right? We've seen a sweep of liquidity, therefore, and the candle's closed. Okay, we've seen a sweep of liquidity and the candle's closed. If the next candle pushes down and breaks the low of the candle that swept liquidity, let's mark this on. This is the low here. So if price then pushes and breaks the low of the candle that swept, therefore I will be triggered short in this market with a stop loss above the candle that swept liquidity. Okay, and I'll be looking to target a 1 to 3 risk to reward. Okay, so it's very, very simple, and it's very, very important that you understand that, okay, you need to wait for you've seen the run on liquidity, wait for the candle to close. Okay, once you've seen the close, if price then pushes and breaks the low, we can look to get short on this market. Stop loss above the high of the candle that swept. Okay, give it 1 pip to breathe, and then take profit 1 to 3 risk to reward. Okay, so this is the Asian session liquidity sweep. Let's see what happens within the session. Okay, we've seen the sweep. We're triggered in on the next candle. Okay, next candle starts pushing down, and we're looking to target a 1 to 3. So let's just zoom out a little bit here. 1 second. 1 to 3. Okay, so we're still within the London session here, and price is just moving, heading to the downside. Okay, play price on a little bit, And you can see within the London session, we have hit our take profit at a 1, 2, 3 risk to reward. Okay, so this is a very, very textbook setup in the fact that, prices hit our take profit within one session. Okay, so within about an hour, hour and a half, prices already hit our take profit. Don't get me wrong, this doesn't always happen. Okay, you've seen trades on this channel where it's took 3 days to play out. Okay, but you do get these very textbook ones where you're in and out the market within a session, you bank your profits, you then move on to the next session, and then you look to enter. If your strategy presents itself again, then you can look to execute. Okay, so just to recap, this is the Asian session liquidity sweep. You can see here we've got the Asian session high, which we ran them orders within the London session, within a volatile session. We then entered as we break the low of the candle that swept, and then we look to target a range expansion of a 1 to 3 risk to reward. Okay, so this is a trend following play there. Okay, it's very important that you're very mechanical with your orders, okay, and very mechanical with the management of your trade. And what I mean by that is, when you entered in the trade, price may consolidate. You don't know what's going to happen. Price may consolidate near your stop. However, you need to understand that, either you're stopped out or your take profit is hit. There's no in between. Okay, you can try micromanage this, that, and the other, but from my own data and back testing, I've only ever found that that actually created sort of negative results. It actually reduced my overall. It may change your win rate in the short term or win rate in general, but in terms of the profit that you're taking long term, it actually has a negative effect. Okay, so understand that if price started to range here, either you stopped out or your take profits hit. Just because you're seeing price range, you allow that trade to play out. Okay, you allow that trade to play out. But yeah, guys, this is the Asian session liquidity sweep, and that is the exact premise of this video. Okay, I hope you guys enjoyed this one. Okay, if you do have any questions, just leave them below in the comments and I'll get back to you guys. And yeah, all likes are appreciated, and I will see you guys in the next one. Okay, take care, guys. Bye bye.